Welcome to another In the Know podcast. I'm David Stone, as always, joined by Susan Weber. Hello, Susan.
Hi, David. Thanks for having me.
Yeah, thanks for being here. And super excited. We have a special guest today, Hudson Delisle. Welcome, Hudson.
Thanks, David. Thanks. Good to be here.
Yeah, thanks for joining us. And, you know, if you don't mind, maybe give a brief introduction to our listeners.
Yeah. I'm in the financial services practice group here at BerryDunn. I've been here for about 4 years and really excited and happy to be working with David and Susan and a great group of people.
Awesome. And I'm going to put you on the spot. What's a fun fact? You got to give us a fun fact.
Fun fact about me. Well, it's getting warmer now, but I like to ice fish in the winter. So
fishing.
That's what I like to do. That's my
Awesome.
fun fact.
What's the catch total at for this winter?
I didn't catch any fish this year, David.
I'm sorry I asked.
No fish this year.
Yeah, well, still fun to be outside, I would suspect.
Yeah, it is. Yeah, it is definitely.
Awesome. Well, hopefully you'll have better luck this summer. You know, not ice fishing, but regular fishing.
Yeah,
Thank
no luck
goodness.
ice fishing in the summer.
Let's hope there's no ice this summer.
Yeah,
I think we're
geez.
ready for something different.
You got that right, Susan. Well, great. Yeah, have a jam-packed agenda for you all today. So we'll jump right in, and sticking with tradition, we'll start off with our quarterly banking profile summary. This is for rounding out 2025, fourth quarter 2025. Then we'll jump into the recently issued accounting pronouncements as well. But starting with the QBP, quarterly banking profile. Hudson, I know you helped draft that this quarter. Any big highlights you want to share with our listeners?
Yeah, there's a few points I want to highlight. Starting with the industry saw quarterly net income decrease roughly $300 million during the quarter, or 3.8%. But this is kind of in the context of double-digit growth seen by the industry for the first 3 quarters of the year. So it's not all grim news, but this is kind of caused by increased cost pressure that was seen in the fourth quarter, with non-interest expense increasing about $840 million, or 4.8% during the quarter. And year over year, it's increased a lot too, by about 7.7%. So
interesting. And yeah, that's an interesting trend, especially given the growth through the first 3 quarters of 2025. So glad you pointed that out. I know another headline that I often see is net interest margin. Any trends there you want to highlight? Yeah.
Well, in the fourth quarter, it continued its increase about 4 basis points. And over the whole year, it's increased about 33 basis points. So we've seen continued increase in the net interest margin, and this is really caused by deposit growth and loan growth kind of moving in lockstep with each other, especially during the quarter. Deposit growth grew about 1.5% in the quarter, and loan growth about 1.4% in the quarter. Loan growth about 5.4% year over year, and deposit growth about 1.4% year over year. And in the fourth quarter specifically, about 70% of community banks reported loan growth, and 65% reported deposit growth. So it's kind of what's under the hood of the increase in net interest margin.
Sure. Yeah, and that's pretty consistent with what I've been seeing, you know, with my client base as well. You know, seeing loan growth really funded by deposit growth. Really not a need to tap into borrowings this year.
Yep.
How about so that's great. On the asset quality side, any trends you want to highlight there, Hudson?
Yeah, so the reserve coverage ratio continued to decline to 154%, indicating that the allowance growth kind of continued to lag increases in non-current loan balances.
Sure. Yeah, that's an interesting stat too, you know, especially when you look back to, I don't know, let's say 2023, where that reserve coverage ratio really peaked, and has steadily declined since 2023. So glad you noticed that as well and pointed it out. Yeah. Thanks for those highlights, Hudson. Those are great.
Yeah. Thanks, David.
So, David, one of our favorite topics on these quarterly podcasts is accounting pronouncements. So what do you have for us today on accounting pronouncements?
I can feel the eye rolls from the listeners, Susan.
Well, they just don't have as much fun with them as we do it. Apparently, that's okay.
Yeah. No, I mean, pretty quiet on the accounting pronouncement front, and I feel like we typically see this quietness, if you will, at the beginning of a year, just trying to let the dust settle and let calendar year end entities get their financials closed out, and so it's been pretty quiet. But I do want to mention an ASU accounting standard update that was just implemented for public entities. Mm-hmm. And it released income tax disclosures. We've definitely talked about this before, so hopefully rings a bell. ASU 2023-09, and just I guess a word of caution for those that haven't yet adopted, for non-public entities that have a calendar year end, these will be adopted next 12/31. So for annual periods beginning after December 15th, 2025. I've mentioned this before, but this is what I refer to as a sneaky ASU. Doesn't impact the accounting for income taxes, is solely disclosure related, but start planning now. It's not too early to plan. There's likely information surrounding your income taxes that you're going to have to gather that you may not have readily available for the new disclosure requirements. And, I'll give one example. Under the new ASU, you now have to disclose income taxes paid, which that in and of itself isn't new, but you have to disaggregate it by federal, state, and then if you have foreign activities as well. And then that state piece actually has to be further disaggregated for any jurisdiction in which income taxes paid is equal to or greater than 5% of total income taxes paid. So you could end up disclosing, or will end up disclosing, specific states in this case that you pay income taxes to, and it could be multiple states depending on your composition of income taxes. So just wanted to mention that. Hopefully this is just a reminder, but definitely something to start planning for now, I would say.
It's always easier to figure out the data points that you need to collect proactively than try to do it in the heat of the moment under pressure, to try to go back and figure it out. So I think it's great that you're staying ahead of that, for sure.
Yeah, thanks. And one other thing I'll mention, for our non-public entity listeners, the public entities have now adopted this, so use their filings as a resource too. Go onto the SEC's website, kind of see how how they've modified their disclosures. Like that can be a great resource too, just to kind of see what the end result is going to look like come next. Well, next time, this time next year. So just wanted to mention that too.
It's always tricky in the first quarter. What even time frame are we talking about? So I appreciate so much that you had to give that a minute to think. But what a great tip that is. Yeah, I think there's a lot to be learned from, how people, in this case, you have some models to go by. So that's really great. So outside of accounting pronouncements, if accounting pronouncements are kind of slow, what else are you seeing on the landscape that you think is worth talking about today?
Yeah, I've seen a lot of chatter on stablecoins. And we've talked about stablecoins before on this podcast. Have some great resources on the website too, specific to the Genius Act. But there's a lot of concern has been surfacing around stablecoins, and although the Genius Act says that these stablecoins cannot be interest bearing, there have been some loopholes that have surfaced where they can essentially be interest bearing if they're structured a certain way or offered a certain way. So folks have taken notice, and in particular, I found a resource from the American Bankers Association, and the resource that I found is specific to Maine, but certainly for those listening that are elsewhere, definitely worth checking in to see if there's a similar resource for your state that's been produced. But what this resource says is it looks at the potential impact that stablecoins could have on Maine community banks. And essentially it found that, as of 12/31/25, there were total deposits held at bank branches in Maine of around 35 billion. And I say that just to provide some context for the next stat that I'm about to mention. So they found that the potential deposit outflow for Maine banks to payment stablecoins could be in the range of 1.7 to 3.5 billion. So you figure could be 10% total deposits at Maine branches. So this is definitely something to be mindful of and watchful of as well. And then related to that resource, and this came out I believe in the summer of 2025, there was a report that the Treasury Borrowing Advisory Committee produced. And just a few highlights here. They also looked at the potential impact that stablecoins could have on not just the banking industry, but also the Treasury market as well. So potential impacts on bank deposits, again, very similar to what American Bankers Association found. Although they did say it could really depend on stablecoins' ability to offer interest, the potential deposit outflow. Mm-hmm. If they are able to offer interest, of course, we would expect more outflows than if they couldn't. And then on the Treasury side, I found this really interesting. They expect that stablecoins will actually create an overall increase in demand for treasuries. And this is due to the reserve requirement that's outlined in the Genius Act, with treasuries being one of those securities that can be used to back stablecoin issuances. And also they found that they believe that there will be an overall shift to the front end of the curve as a result of stablecoin issuance. And again, this is because of the Genius Act, where basically, if you're going to hold treasuries, they have to be short term. Like T-bills, for instance, that are 90 days or lesser for maturity. So I found that interesting that we could see this shift overall economically to the front end of the curve as a result of this legislation.
That is interesting. I'm glad that you brought that up. I'm sure that people are still in the process of trying to absorb exactly what this all is going to look like and what this is going to mean for them, and certainly the related choices that they're going to need to start to make around some of these things as they come online and become more available in the ways that you've described. So thanks for that.
Yeah, thank you. And Susan, what are you seeing?
Oh, gee, I thought I was going to get out of it today. No.
Not that easy.
Not that easy. I guess there's really just two things that I thought would be worth mentioning on today's podcast. I want to touch on Basel III and also on M&A activity that we're seeing more broadly in the market. So I'm going to start with Basel III. Many people are calling this well, I guess I should start by saying, just in case people are not even really sure what Basel III is, this was really related to capital requirements coming off of the Great Recession, which now just seems so amazingly long ago, right? Yeah, we're talking 2007 to 2009, and we're still talking about the lagging effects of legislation and regulation and things related to that. And what we've seen for the last year plus is really a pullback on a lot of the guidance and specialized guidance and requirements that we've kind of gathered like sedimentary rock, over the ensuing years and decades. And, with the Dodd-Frank and the thousands of pages of things and specialized guidance. And I think Basel III is sort of that capstone, right? That's kind of the last big rock that we had to sort of deal with. And so this was looking to establish higher capital requirements for banks to withstand sort of the rockiness of the economy if needed. Really, like I said, came out of the Great Recession. And the debate has been all along, what are those capital thresholds? How big do they have to be? And of course, in the ensuing decades, a lot has changed in the banking industry. And with the new administration, administration and some of the new appointees that have come through. Certainly, Michelle Bowman being a real champion of sort of right-sizing regulation and guidance requirements. Earlier this month, she unveiled what they call a capital neutral reproposal of the Basel III. They call it Basel III Endgame, which is a little Marvel Comics for me, not to make light of it, because it certainly has created a lot of angst for people. But she's really come out with a capital neutral reproposal, which it really gives a strong signal of the direction that this will take. So essentially, what any and all of that means is that for some of our largest, most systemically important banks, this will be viewed as essentially capital relief, right? Proactively, preemptively capital relief. So I think for any other bank in this space, it's probably a good thought to say, well, what will they do with that now that they know that capital, or they suspect that capital will not be needed to attain these higher, any sort of higher benchmarks. What might they do with that? How might they deploy it? How might they use it? How might they invest it? So I do think that people are thinking that shareholders will gain from this, and I'm sure that some of that is true as well. But it wouldn't surprise me if it has a ripple effect on, sort of the strategic plays that some institutions are making as a result of that. So for that reason, I think it was worth mentioning.
Yeah, Susan, not technically related, but am I allowed to call it Basel III instead of Basel? I don't know. I'm a huge Basel fan, so.
I don't know. I know Basel III, Basel III. I was like, it's not a spice. It's not an herb. Yeah. But anyway, yeah, I think you can call it whatever you want at this point. I think most in the industry are. Well, I don't want to say most. I know some in the industry that are just happy that it's kind of nearing an end at this point.
Sure. So. Especially with it called. I'm glad you brought up the end game reference too, because boy, that just sounds so ominous too. So
it really does.
Yeah.
And if anybody wanted to go in and do some internet searches and get certainly more background, and if you're ever curious about it, if you literally would want to query Basel III Endgame, you'll get a whole bunch of things.
Yeah. So. And you I think you had also mentioned M&A. What do you have? What do you have there?
Well, not that I like to promote any one particular resource over another, but I do want to just mention that Intrify just released a Q4 2025 Bank Executive Business Outlook Survey, which you can access for free just going to their site and adding your information, and they send it to your email, which is great. But I just think it's worth noting, we've certainly been seeing and hearing an uptick in M&A activity. It's been made a little easier because of some of the regulatory relief. But I just thought sharing a few stats would be interesting. So in 2025, the U.S. banking sector experienced over 170 deals being announced during the year. And credit union purchases of banks made up close to 10% of that total, which is a pretty significant percentage, year over year. And credit unions acquired 22 banks in 2024, just to kind of give you some sense of that. So, and an additional 16 in 2025. So, I think there's always been sort of this tension between banks and credit unions on the tax front, right? They get a break from credit unions. So this is always viewed in an interesting way because you're kind of taking banks out of the mix and moving them into a different tax situation in the competition. But more importantly, it's this increase of M&A activity. And certainly we've seen a very robust number of deals being announced and larger deals being announced in the first part of 2026. So it bodes well for, I guess, well in the sense of just how many acquisitions we might expect this year. And they can be very complicated transactions, of course. Geographies and systems and things aside, there's a lot of human impact and a lot of other details that are involved there. And I guess this is just really a two-part shout out. The first is, of course, these transactions, especially in early phases, are very confidential, and only a certain number of people can be aware of them, but it's good for you to loop in folks like us and on the accounting side as soon as possible to make sure that these transactions and the understanding of these transactions and how they affect your profile and your statements is very important. So, and then the second part is a lot of people need some real clear guidance through these. In some institutions, they don't have any experience in what it means to really merge two institutions together. And we have very deep experience across a number of disciplines that we could help folks with. So just sort of a mention there that if you find yourself in one of those particular categories, either acquired or acquiree, we're here with knowledge we can share and ways that we can help. And so this can be a very tension-filled time. And I think, just having some good guidance and people on your side through that transaction is important. So just wanted to kind of mention that.
Yeah, thank you, Susan. Yeah, great thoughts.
Happy to. So let's talk about something else. What do you have to round us out today, David?
Well, this is like hot off the press. Kind of a fun one. I don't know. AI. We got to talk about AI, right?
Of course we do. That is a fun topic.
Yeah. So I recently saw that, some of the larger, commerce companies, if you will, Google, Walmart, Amazon, as well as some of the larger payment processors, Visa, MasterCard, PayPal. They're starting to develop AI agents for shopping, and specifically what these agents do is they actually make payments on the user's behalf. So these computer programs, they'll reach into the user's bank account as well as debit and credit cards. So that might not directly seem related to the banking industry, but of course it is, in the sense that, now you have these autonomous agents that are, again, making payments on your customer's behalf. And I mean, I would suspect there's some sort of agreement or authorization that has to occur up front, but even so, what will this look like for your institution? Are there certain things in place that would prevent this from happening? Could it cause friction for your customers that do opt into it, that do want the service? So some things to be thinking about and monitoring. I don't know, how quickly this will get off the ground and become mainstream, but seems like, the next iteration of AI will be this, AI making not necessarily decisions, but taking action on its own. And that's essentially what agentic AI is all about. So I don't know. I thought that was a little fun way to round out our conversation today, Susan.
Well, it's funny. As I was listening to you talk, I was thinking to myself, do I think that's fun? And I'm sitting here thinking, a bot that could reach into my checking account. I don't know that I think that's fun. But then I have to step back and say, I still remember when the first ATM rolled into town. And
Sure.
Look at what's happened now. So I think it's probably good for everybody to step back and, no matter how you're feeling about AI and bots, and just to remember that innovation is not always bad. And sometimes it's really helpful. And it may sound scary at first, but it usually matures and works out in a very real positive way. So everybody should just keep their mind. I just encourage people to keep their minds open to this new world. So anyway, great. Well, I don't think I have any other topics for today. Well, I'm sure we could talk about any number of other things, but I think that those were the key things I had to bring to the table today, David. So thanks for having us.
Yeah. Thank you, Susan. Thank you, Hudson, for joining me today. As always, a pleasure. And before we do depart, I'll just put in a quick plug. Our annual New England Banking Summit is upcoming May 28th and May 29th. New location this year. We're going to have it at the Omni Mount Washington Spa and Resort. Super excited about that. It's going to be a great spot. Have some great activities planned. super excited to be partnering with Stifel again on this event. Susan, I know we've been, on the planning committee talking about the agenda and all the other great activities, and boy, is it exciting. It's going to be a great couple days.
It is going to be a fantastic couple of days, and it's a beautiful venue. We have golf right there on site as well. We have some resort activities, the day before lead-in, of course, dinner. So hopefully we'll link the information to this podcast as well so people know how to find us.
Yeah, exactly. Well, great. That's all I have. Thank you to our listeners for tuning in again, and we'll catch you on the next In the Know podcast.